By now, most of us have seen the news on the Equifax data breach. After Equifax announced the security breach, the company's stock dropped 43% in price. Many investors new to experience have been eyeing Equifax for a possible long. Warren Buffett once said, "Buy when others are fearful," and many are fearful of Equifax at this time. But before you finalize your investment decision, here are 10 things you should know about Equifax. 1. Of the big 3 credit rating agencies, Experian, Equifax, and TransUnion, Equifax is number 2 in revenue. As an investor, it is always great when you can find value in the number 2 company of a big industry. 2. Equifax operates in 4 business segments: U.S. Information Solutions, which accounts for 39% of the revenue; International, which accounts for 26% of their revenue; Workforce Solutions, that accounts for 22% of the revenue; and Global Consumer Solutions, that accounts for 13% of the company's revenue. 3. Equifax generates the majority of its revenue from commercial and government customers. It's believed by some that the security breach won't affect ongoing business from Equifax's commercial and government customers. If this is the case, it'll prevent revenue from decreasing significantly in the coming years. 4. Equifax has increased revenue every year going back to 2010, and before the announcement of the cybersecurity breach, analysts expected revenue to grow by 9% this year. Yahoo Finance now has expected revenue growth for this year at 7%. 5. The security breach was announced by Equifax on September 7, 2017. The company reported 143 million U.S. consumers' records had been compromised in the breach. Days later, Bloomberg reported a cybersecurity breach of Equifax's system that occurred back in March. That's 5 months earlier than the company had announced. Equifax responded that the two are unrelated. In the midst of all this, the public discovered that 3 Equifax insiders sold their stock prior to the announcement of the security breach. When you invest in a company, you're also investing in the management team, the management's ability to keep the company growing, moving forward, and out of trouble. Investors are looking at managers to be ethical, responsible, and offer explanations and solutions. In the case of Equifax, the company's management has handled the situation terribly. Hopefully they'll get it together for the sake of the consumers. 6. The website Data Center Knowledge did a study to determine what a data breach cost the companies who were affected. They discovered a data breach in the United States cost the company on average $7.3 million. The average cost per record compromised is $225. Doing the math, for Equifax, 143 million consumer records at $225 per record comes out to over $32 billion. It's a lot of money. 7. To try and get a better idea of what this may cost Equifax, let's take a look at Target and Home Depot. Target announced the security breach in 2013. They reported 40 million credit card and debit cards had been compromised between Black Friday and December 15th of that year. Almost a month later, Target reported that 70 million mailing addresses, phone numbers, email addresses had been compromised. In Target's 2016 annual report, the company states the security breach cost the firm $292 million. Home Depot reported a security breach in 2014. In Home Depot's case, 53 million credit cards were stolen. Home Depot's reported that the security breaches cost the company $198 million. Looking at Target and Home Depot, we can be sure that the cost to Equifax will be in the hundreds of millions of dollars. 8. Target and Home Depot are good comparisons because they are well-known publicly traded companies. In Target's case, their stock traded at $63.59 on December 18, 2013, one day before they announced its security breach, and the stock fell to $54.66 over the next 2 months, a 16% decline. After hitting the $54.66 support level, the stock then traded to a high of $79 in 2015. In Home Depot's case, their stock was $91.64 the day before the company announced the breach. The stock didn't take a dive like the Equifax stock, and it didn't do a slow dive like Target stock. Instead, Home Depot stock increased in price. 9. There have been dozens of class action suits filed against Equifax. We've seen figures as high as $70 billion. That would be the largest class action suit in U.S. history. Keep in mind that Equifax has $400 million in cash and $2.8 billion in debt according to their last quarterly report. The company is not in the best position to survive a $1 billion fine and settlement. 10. After the cyber attack, Wells Fargo upgraded Equifax to a buy rating. Wells Fargo has a price target on Equifax of $127 to $135. Wells Fargo analysts believe that Equifax's core business-to-business operations probably won't be impacted by the recent data breach. Wells Fargo believes a best-case scenario for Equifax is a $500 million fine, a loss of 50% of its consumer business, and a $25 million rise in operating costs. So there you have it. More information about Equifax to help you make an investment decision. After doing our own research, the team at Seville Report does believe there is value in Equifax. However, we find it difficult to say that this is the time to buy. We feel there's more news to come, so we're going to sit and wait. Thank you for watching. You can find links to the source material in the comment section below. Happy investing. And here's a bonus that occurred while we were finishing up this video. The CEO of Equifax, Richard Smith, stepped down on September 26, 2017. When the stock market opened, Equifax's stock appeared bearish, but rallied later in the day. It appears that investors are taking the CEO's resignation as good news.